And what really differentiates Tesla from everybody else in the crowd is Tesla's profitable, the others aren't. Tesla brought battery production in-house way ahead of everybody else. They started manufacturing in China, which brings costs down way before everybody else.
They will have flexibility on price, but they don't necessarily have too much flexibility. The reason I say that is because they have negative gross margins.
Good morning, Andrew. Let's bring in RJ SCARINGE, founder and CEO of Rivian. RJ, you heard Andrew set this up with better than expected results in the second quarter. You raised your guidance for the third quarter and then your production for the full year. Do you feel like you finally have turned the corner when it comes to the supply chain and the production issues that you really have had to tackle over the last year?
Look, I've been poring over the data, right? Production jumped 50% quarter on quarter. Deliveries jumped 60% quarter on quarter, but you raised guidance by 2,000 units, which is less than 5%. Why were you not able to raise guidance to a higher degree?
All that more, so let's get to it. Tesla wait, hold up. Rivian Automotive? I definitely don't plan to buy any of their stock, but since we're here, Rivian down almost 8% for the day, coming off the heels of their Q2 earnings. More on that in a minute. For the week, Rivian down over 14%. Going back a whole year, Rivian down almost 40%. November 10th, 2021. Rivian becomes a publicly traded company. How have investors fared so far? Well, it's not pretty. Down almost 80% since inception. Tesla, on the other hand, down about 2% today. Past week, 4.5%. For the year, 15.5%. And don't worry, Rivian stock owners, those that invested in Tesla at the same time that Rivian IPO'd have not fared much better. So what's the difference between the two companies? I'm glad you asked.
All right, time to talk all about the EV market ahead of earnings for Lucid and Rivian, and a lot of price cuts that have been happening in this group as they battle it out. Right now, I'm going to bring in Garrett Nelson, Vice President, Senior Equity Analyst at CFRA Research, and Steve Wesley, Founder, Managing Partner of the Wesley Group. Thank you both for being here. Garrett, let's talk about Lucid. It reports today after the market closed. You have a hold rating. With the Air listed as a key strength, I did see that we are watching some of these names. In fact, is that the one that they just cut the price target on, right? $12,000. That may be the one that they cut the price target on. Tell us more about this one.
That's right. So they just announced price cuts on all trims of the Lucid Air, and Tesla really kicked off the year announcing price cuts, launching this price war. There have been a series of price cuts, both from Tesla and others. And despite new federal tax credits on EVs, despite these price cuts, the EV market has shown increasing signs of oversaturation. So if you look at dealer inventories of EVs, they're about double what they are for all new vehicles, and so you're seeing some very dramatic price cuts, and companies like Lucid and Rivian, that just haven't achieved scale yet in terms of their production ramp up. They're really struggling in terms of cash burn and still nowhere near profitability.
Battery electric vehicles are less than 10% of overall new car sales. Don't be blinded by the electric vehicles that are sitting in dealerships. All the best EVs come direct from the manufacturer.
And you have a sell on Rivian, is that right, Garrett?
That's right. That stock has almost doubled over the last 6 weeks, and we just fundamentally we see no good reason to justify that.
I see. Steve, in your notes, you talk about Lucid, and you said, hey, I'd rather own the car than the stock. I don't want to spend too much time on it if it's something you don't like. I would rather hear what you do like. But touch on it, please, Steve.
Look, you bet. Lucid makes what I think is probably the most beautiful car in the market, but 100,000 to 150,000 per car, that's a pretty small market, and they've got to ramp up production. They have just gone from selling 2,314 cars in Q1 to selling 2,173 cars in Q2. they're going the wrong direction, and they've got to fix that. And you got to look at the other half of the equation. They're burning $1 billion per quarter. They've only got $3.4 billion in the bank at the end of Q1, enough to survive, maybe Q2 of next year. But they're going to need to raise more money from the Saudis or another investor, or they're in a world of hurt. So right now, I'd rather own the car than the stock.
The EVs coming from these electric vehicle startups are superior than any of the internal combustion engine variants. The only real problem, like Garrett stated, is the production ramp of both Lucid and Rivian. With industry-leading margins, Tesla is not trying to compete with Lucid and Rivian. With battery electric vehicles at 7%, the real competition are those that are still buying the internal combustion engine. Tesla is lowering prices not to stoke a price war, but to leave no doubt that an electric vehicle should be the consumer's next purchase. Maybe not an electric vehicle, but for sure a Tesla. Let's take a look at Steve Wesley's notes here. Tesla is still king of the hill, no doubt. 7 out of 10 top-selling EV models are made by Chinese companies. That should give every legacy OEM some pause. Rivian Automotive, big question over what happens when Cybertruck enters the market. That's not just a big question for Rivian, that's a big question for everybody that makes trucks. Ford, GM, get ready. When Giga Texas starts putting out 100,000 Cybertrucks a year, I'm afraid it'll be too late.
Right, understood. And Tesla's always your favorite, Steve, right? Is that, I know you used to be on the board of Tesla. That seems to have been one that you've always liked.
Look, that story is getting more nuanced. Look, Tesla is still the king of the hill. They delivered 466,000 cars in Q2 compared with 1,200 for Lucid. $25 billion in Q2 revenue, on track to deliver 2 million cars, $100 billion in revenue. This is a huge company. It's no surprise it's one of the 10 largest market cap companies in the world and profitable for 15 quarters in a row. So what's interesting there is that if you look at General Motors and Ford, both struggling to get to 100,000 units, that's not even 5% of what Tesla is producing. But, well, Tesla has been the winner so far. And again, the Tesla Model Y, biggest selling car, gas or electric globally. If you step back and look at the big picture of the 10 biggest selling EV models in the planet today, 7 of the 10 are Chinese. So the Chinese are coming. Tesla's going to have to account for that. Ford and GM are going to have to kick it into a higher gear. This is going to be a fascinating show to watch.
Yeah, and we've heard that. Garrett, your thoughts quickly on Tesla, and you also have the CFO stepping down. It seems to have shocked some folks. He's been at the company since 2010, but maybe it seemed to be a surprise. Are you a Tesla fan? And if not, what about some of these other Chinese companies like BYD, and you can name the other ones that you may find attractive?
Yeah, Tesla's still our top pick for all the reasons that were just mentioned, but there's a lot to like about this stock. Just beginning first production of the Cybertruck, you look at the reservation count on that model, it's multiple times any other forthcoming EV. And the company's sheer size in terms of market cap give it a lot of advantages in terms of cost of capital over the rest of the industry. Remember, they're the largest company in the industry in terms of market cap. They're not nearly the largest in terms of their annual volumes. But we think, the stock will grow into its valuation here in the coming years. So that is our top pick. As far as the news out today regarding the CFO stepping down, he had been in that role for over 4 years. And, we don't think there's any red flags there. In fact, he's going to stay on with the company until the end of the year to make sure it's a seamless transition with the new CFO.
Is there a successor for Elon Musk, Garrett?
I'm sorry?
Is there a successor in place for Elon Musk to run Tesla?
One thing the company has been doing over the last year or two is highlighting the strength of its bench. In the minds of a lot of investors, Elon Musk is the face of the company. That is true, but they have an incredible amount of talent, at the company. And so, we don't see Elon stepping down in the next 2 or 3 years, but longer term, they're going to have to figure out a succession plan.
Yeah. We didn't talk, Steve, about Rivian much. Did you mention that one quickly?
Let's talk about Rivian. They make a great truck, but And they're kicking into a higher gear. 980 million in Q2 revenues. That's great.
Yeah.
Increased production from 9,400 units in Q1 to 14,000 units in Q2, 169% year-over-year growth.
Right.
But they're still burning around 7 billion a year. Only have 12 billion in the bank. So they too are going to have to raise money. And what really differentiates Tesla from everybody else in the crowd is Tesla's profitable. The others aren't. Tesla brought battery production in-house way ahead of everybody else. They started manufacturing in China, which brings costs down way before everybody else. And they're way ahead on what's called over-the-air software, because Tesla realizes that they're not just a car company anymore. They're a technology company. And when Garrett said, gee whiz, they have to grow into the valuation. When you're growing at 40% a year, in a year that looks like $100 billion, I think this stock is going up. They've already grown into the valuation. Massive growth.
All right.
Get 'em! You motherfucking right. Grow into the evaluation. It's that kind of backwards thinking from Garrett that'll have other people missing this opportunity. Tesla is by far and away the leader in the battery electric vehicle space, which will be the only space worth mentioning in the future. No one is growing as fast as Tesla. No one is accumulating the margins per vehicle sold than Tesla. No one, and I mean no one, has the foresight to think about building 20 million vehicles per annum. Come on, baby. It don't take all day to recognize sunshine.
Correspondent. GT, this stock is obviously has a lot of proving to do. It seems like people generally like the car. It's got great reviews, but what about the financials at this point?
Well, I think that's where the questions are. Obviously, the car is becoming more popular. I see a lot of their trucks and actually SUVs, flagship brand Rivian, driving around a lot more. They're actually selling more vehicles on a tremendous basis relative to where they were just a couple of years ago. I think the questions are for investors is how long can the company continue to essentially have costs of production? This is just cost of the goods, in other words, materials and labor, relative to sales, which are negative. So in other words, it has negative gross margins, which again is very challenging for any company. But nonetheless, you can actually see since around May, the stock has nearly doubled, in fact. But taking a look at the numbers, they are improving. So there's a reason why there's some movement in the equity since last quarter. But overall, the numbers are certainly better than estimates. I mean, they lost $1.08 per share. But you have to consider that's a significant improvement relative to $1.62 of a loss last year, as well as sequentially last quarter they lost $1.25, and they beat the estimates, which were expected to be down $1.41 per share. Now the sales at $978 million beat the estimates, which were the estimates. They actually came in at $1.12 billion. But if you look at that number relative to last year at $364 million, that's over 200% increase in terms of sales. So there's tremendous amount of revenue growth for Rivian, not to mention just to compare the deliveries for the quarter. The deliveries were 12,640. Last quarter, it was 7,900. And if you look at last year, the unit deliveries were significantly lower. They're about 1,200. So we're seeing just some exponential growth in sales for Rivian. The other thing is the production guidance, which was for the full year, around 50,000. That's double the guidance that they provided for 2022. They missed it slightly, which was 25,000 at like 24.6 at the end of 2022. But they're actually increasing their production delivery guidance to 52,000 from 50. So it looks like based on the numbers, close to 13,000 units for this quarter, they seem to be on track for that. Again, that 50,000 mark, which they're now exceeding it by 2,000 units.
Whew. A lot of numbers there, but what you really need to take from that is that Rivian is improving. Sure, they've got negative gross margins. That's not surprising. They're nowhere near volume production. They haven't benefited from economies of scale. They're still going through those growing pains. Building EVs is not as easy as some people think. But Rivian is on the right path. You You done?
Okay, that's good. I made a mistake in reading that at first, and this makes a lot more sense. I was like, wait, well, how would production be down? That doesn't make any sense. They're totally screwed if that's the case. So, all right, they upped the guidance a little bit. A couple thousand vehicles are going to be online, and the overall price wars that have been kind of the defining characteristic of the EVs right now. Do they have to take part in that, George, or if they're upping their production, then I guess people are buying them at the rate that they feel is good enough to keep prices where they are?
So the whole premise is, yeah, as long as quantity delivered and of course, reservations increase, they will have flexibility on price, but they don't necessarily have too much flexibility. The reason I say that is because they have negative gross margins.
Ding, 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 ding. Tell him what he's won, Johnny.
If they were closer to break even, at least on gross margin basis, they would have more flexibility. So based on what we're seeing and based upon the numbers they projected at the end of last year for this year and the pace at which they're producing and delivering, which is increasing, they may have gross margins. It doesn't look like they'll become break even this year, but they're getting closer and closer.
We're watching shares of EV truck maker Rivian after that company reported a smaller than expected adjusted second quarter loss and revenue coming in above estimates. Phil LeBeau joins us now with a special guest. Good morning to you, Phil.
Good morning, Andrew. Let's bring in RJ Scaringe, founder and CEO of Rivian. RJ, you heard Andrew set this up with better than expected results in the second quarter. You raised your guidance for the third quarter and then your production for the full year. Do you feel like you finally have turned the corner when it comes to the supply chain and the production issues that you really have had to tackle over the last year?
Yeah, Phil, great to spend time with you. Yeah, it's been a great first half of the year as we think about coming out of 2022 with, as you said, the supply chain challenges that we encountered. And, as we stand today, we have tremendous level of predictability in our ramp and across our supply base, which has allowed us to, achieve significant quarter-over-quarter improvements in terms of production, but importantly allows us to run the plant in a much more efficient manner. And we're going to continue to see that as we go into the second half of this year.
RJ, are you seeing pricing pressure? And I bring that up because Kelley Blue Book is out this morning, just a few minutes ago, with the latest stats in terms of EV prices. They continue to come down, now just over 53,000. You saw what Ford has done with the F-150 Lightning. What are you seeing with the R1T? Have you had to bring down your prices?
No, with regards to pricing, we've been very methodical around how we've approached pricing the vehicles, and we're just now launching a dual motor variant of the R1T and the R1S, and that allows us to offer a lower price variant relative to what we launched with our quad motor. And this dual motor, incredible performance, really fun to drive, incredibly efficient, but does create an entry level, if you will, version. But this is still a vehicle that can achieve 0 to 60 in 3.5 seconds, over 400 miles of range in some configurations. So this is a great way for us to expand the number of price options that we have available for customers. The other thing I'd say is, which we pay really close attention to, is residual value. And there's, when you think about how do we look at demand and understand where demand is, looking at the value of our vehicles in the used marketplace is really helpful. And in the truck SUV segment, regardless of electric or gasoline or internal combustion, the Rivian vehicles are among the highest when it comes to residual value. And you can see that. There's a great demand for used Rivians, which is just reflective of the strong demand backdrop that we have.
Since RJ didn't want to answer the question properly, let me go ahead and do it. If you sell a product for $60,000, yet it costs you $120,000 to make it, lowering prices is not really an option. That is, unless you plan to go bankrupt faster than Superman can catch a speeding bullet. There is no price war. Tesla has the margins to lower their prices and compete with the internal combustion engine. All these EV startups, Lucid, Rivian, and this includes Ford and GM, their hands are tied when it comes to prices. When they start making battery electric vehicles profitably, maybe they can enter the real fight, which is competing against the internal combustion engine.
RJ, you guys had better production, or more production, I should say, of the R1S, the SUV, than the R1T, the pickup truck. And that's going to be ultimately what you build and sell more of going down the road here. Has there been a shift in demand? In other words, do you look at the R1T and the pickup truck and you say, yeah, there's a market there, but the greater demand is going to be with the R1S?
You know, we'd always anticipated that the R1S would be the larger volume variant of the two. But prior to the second quarter of 23, most of our production, or majority of our production, I should say, was on R1T. And so the second quarter, Q2, was the first time where production of R1S exceeded R1T, with about 70%, as you said, of overall R1 production being R1S. And we're going to continue to maintain roughly that. Roughly 2/3 of production will be R1S. And that roughly maps to demand. And that's what we expected. And it's worth noting, the R1S is a more profitable vehicle for us, so we're very happy to have that product mix.
Why is that the more profitable vehicle?
It's a slightly higher price point, and then in terms of build efficiency, I talked about this in the earnings call yesterday. We've been able to achieve a build efficiency on the R1S that's essentially equivalent to the R1T. So it's from a segment point of view, price levels tend to be a little bit higher in the SUV segment relative to the truck segment.
Well, that's not what I wanted to hear. The R1S makes more money for you because you're selling it at a higher price point. Don't get me wrong, it's good that they've gotten the production cost down for the R1S. It's going to be a painstaking process to get your cost down to where you're starting to make money on these vehicles, especially in this macroeconomic environment where pricing is so important. No matter how good your products are, if the consumer cannot purchase them, the consumer cannot purchase them.
Hey, RJ, during the analyst call yesterday, you were asked about the exclusivity of your contract with Amazon, which obviously is a shareholder within Rivian, and you're in discussions with them to see if you can perhaps bring other customers into your product portfolio in terms of selling electric delivery vans. Where do things stand in regards to that contract with Amazon?
I mean, as you said, Amazon's is a very large shareholder, our largest, in fact, and we have a great working relationship with them, and it extends across many parts of our business. But importantly, they're a large customer. And, you know, one of the things I've talked about before, when you think about the scale of Amazon's operations and the scale of running a logistics network like that, for them to convert to electric at the speed that they're doing, it's really outstanding. So we're working hand in hand with them for them to grow their, the amount of volume that we're putting of vans into their network. But importantly, we're also working closely with them to open up the exclusivity provisions that we have in our original contract that will allow us to sell vehicles to other logistics operators and users of large commercial vans. So we're excited about that, making good progress, and we hope to have something to say more specifically on that soon.
Bedfellows make for strange business partners. Instead of RJ and Rivian deciding on who they should partner with, that decision is going to be up to Amazon. Largest shareholder? Money talks, bull walks, my friend. Luckily, I suppose, Rivian is nowhere near the volumes where this is an issue. No need to step out on your marriage with Amazon. You're barely satisfying them.
Hey, one last thing, RJ. You guys are in the process of building your plant in Georgia. That's where you're going to build the R2 product line, the smaller vehicles, lower priced vehicles. Do you have the capital, do you believe, in place to get you all the way through the beginning of production in 25 on the R2?
Yeah, the production facility for R2 in Georgia, it's making progress. Part of the work that's underway now is all the grading work. So about 80% of the site's been graded and very close to getting it set up for us to start breaking ground on the construction of the site. We've also kicked off the long lead items for some of the equipment that goes in. So these are things like the paint shop, stamping operation. And as Claire and I reiterated yesterday, we've capitalized the business in such a way that we're in a strong cash position and won't require any additional capital through 2025. So we're able to focus on continued ramp and normal and the path to positive gross margin, but of course, and positive margin, but of course also focus on development of the R2 platform.
The path to positive automotive gross margin is f***ing hard. And to be honest, they're not even close. I do not believe RJ for 1 second that they will not have to raise capital. Color me skeptical, but everybody's got a plan. until they get hit in the mouth. In conclusion, everyone building battery electric vehicles will be compared to Tesla. They are the benchmark, they are the standard. With that being said though, Lucid, struggling mightily. Rivian, struggling too, but improving. Rivian not only beats the market estimates, they're raising their guidance on production, which is fabulous. But they still have a long way to go. Well, that's all I got for you today. Be easy. Peace.